Welcome everyone, I'm Robert Green, CEO of GreenTrader Tax and Managing Member of Green NFH LLC. I'm joined today by my partner Darren Neuschwander, Managing Member of Green NFH LLC as well. Darren and I have been working hard together, actually Darren first, on this whole cost-basis reporting saga. Darren started with one of the task force from the AICPA, which he was invited on as a member, to deal with the IRS on this issue going back to the drawing board. I became more interested when the rules were implemented, and we found that, wait a second, there's a lot of problems here. So it got my attention more as CEO. So I delved into it. And sort of, I guess I'm up to speed with Darren now, and Darren and I have been working together with the media at Wall Street Journal, Barron's, Forbes, to flush out this story. Now, a little history and perspective here. This is about trade accounting, reporting your securities trades on your tax return. That's not an easy undertaking. Unlike futures, where people get summary reporting on a 1099 that says this is your gain or loss to report, and you report it. That's easy. With securities, it's a world of difference. The broker does not tell you your net trading gain or loss. So since we've been here at GreenTrader Tax, active on the internet since 1997, around 2000, we hooked up with TradeLog, a third-party software company, and I said to Dave Ike, the owner of Armin Computing, the owner of TradeLog, I said, Dave, why don't you focus the product, a portfolio product, on taxes? We need a program that will accommodate the needs of our clients. Barron's, Teresa Carey, who writes Electronic Investor, pointed out that the brokers are not providing tax support. They're leaving the clients hanging. So the brokers have information you could download. TradeLog downloads it, and we added the tax knowledge to it so we could have a product that came out of TradeLog that you could give to our CPAs to prepare your tax returns. And we glance over and look at it and reconcile it, things like that. So it's worked really well for a decade. Now the IRS realized that with securities, they were only reporting proceeds. Traded $50 million of stock, they reported $50 million of stock. Traded another $5 million of options, they didn't report that. The IRS felt that a lot of traders were not reporting their wash sales properly. You know, when you have to defer a loss to the next year because you bought back the position. They felt a lot of traders were not using the right kind of software that they could trust, and a lot of people were fibbing about their capital gains. So they're not ready, as the IRS, to say securities are like futures with mark-to-market economic reporting, one number, easy to figure out. They still want to keep wash sale rules, realized versus unrealized. You only report realized, short-term, long-term. So they want to make a big step in the direction of increasing the compliance. You can't naysay them for that. That's a laudable goal. But the way they have done it may have made sense on the design drawing board. It may have made sense in the regulations, but it's causing tremendous confusion in the implementation. We've boiled this story down over the last 4 blogs as we continue to dig deeper. And our latest blog today, I think, is a breakthrough. It says that it's apples and oranges. The 1099 is prepared for brokers to comply with 1099 rules, which are very incremental. They're not 100% reporting. They phased in some things for 011, more for 012 mutual funds, more for 013 options. So 1099 rules are very specific for what is covered, non-covered, what they're supposed to include. It's not 100%. So the perception is that with these beefed up 1099s, people are supposed to match on this new controversial Form 8949. But the perception is wrong, because you're not going to match. There are going to be large differences. Yes, some of those differences are errors that we think brokers are making on wash sales, and we'll tell you why. There's a whole list of why the wash sales are wrong. But a lot of the differences, again, are apples and oranges. So unfortunately, this year taxpayers are burdened with the responsibility of identifying these differences and explaining them to the IRS. We think that is unfair. The IRS took a large leap in the direction of bigger 100% reporting. They will never get to 100%. They're far from 100%, even after transition. So why force taxpayers to account for all the differences? It's just very unfair, and there'll be lots of tax notices that come out of it, audits, expense with preparers to represent you, painful experience, emotional. It's a bad scene. We want the IRS to backtrack, not to match these 8949s. It's matching to the unmatchable in some cases. Taxpayers should not be deputized like that to do the IRS's dirty work. So that may or may not happen. The IRS may or may not backtrack. We have no reason to think that they will. And at this point, let me introduce my partner, Darren Neuschwander. And then we also have on the call Jason Derbyshire of TradeLog. He's actually going to show us TradeLog and how it does the 8949 and how they're dealing with this problem. And we've been working very closely together on this. TradeLog is a separate independent company. We add the tax knowledge to it, but they are separate. 95% of our clients use TradeLog on their own. Comes with great product support from TradeLog. Only some need more help or want us to do it. Our CPAs also always look at the TradeLog files to be sure they're right. So Darren, welcome again as my partner on the call. And Darren, back to the matching issue. You came up with this idea, Darren. A lot of what I write in the blog, these are your ideas too, and we're working on this together. Give us the precedent, which I covered on the blog last time on the 1099K, very quickly, why you think maybe the IRS shouldn't match it this year.
Yeah, thanks, Bob, for hosting this again. We do have concern that there's going to be an issue later on when the IRS actually starts their computer systems will actually take your information on your tax return and do a comparison of that to the tax information that they receive from the brokers. So we're concerned that there's going to be some matching issues, and when a matching issue occurs, that generates what's called an IRS CP 2000 notice. And we're anticipating a large amount of these notices unless we have some type of relief from the IRS with this matching. What Bob is referring to on the 1099K, and this was actually, it's not something that was really brought up in the public knowledge. The IRS gave some relief to it, but it wasn't really addressed in the public until this past weekend. There was an article in the Wall Street Journal about it. What happened is there was a new 1099K that anybody that actually receives credit card income that was going to have to report that separately. on their tax return, whether you're a sole proprietor or you actually work inside of a S Corp or an LLC. You were going to have to separately report your credit card sales versus your cash or check sales. And that was going to put an enormous amount of burden on the entire retail business, in addition to just any sole practitioner or anybody that had rental property was going to have to keep up with this. So there was some discussion held with the IRS, and the IRS actually granted relief on that because they saw that there was going to be so much burden put on the taxpayers to keep up with this, even though the reason for doing it was really to provide, it's really PayPal. There was a lot of individuals that was receiving income via PayPal, and PayPal was not necessarily required to issue 1099s to these individuals, and the IRS felt some of that income was not being reported. So hence the reason for the invention of the 1099-K. They're still issuing the 1099-Ks. PayPal has to do that. But what they backed up on, they being the IRS, is the requirement that the taxpayer actually break that out individually within their total sales. Now we're back to our issue at hand. We're not saying that the brokers don't need to report anything on a 1099-B. That's not what we're saying. What we're asking for is similar relief of what the IRS granted on the 1099-K, so there would not be any matching issues with that tax return compared to anyone else that's an investor or an active trader, and comparing the 1099-B information to what's actually going to be on the 8949s and the Schedule Ds, so that we can get similar relief in that we will not anticipate a large amount of notices for all of our clients and just the general public that has any type of brokerage accounts.
Well, that's great, Darren. Thank you so much for that explanation. I know you're working on that with industry groups, and we're working on it here too. You and I, we sent that email to the Treasury this morning about it to read our blogs and to get relief. That's what we do with Traders Advocacy. We fight for the interest of traders, and I'm going to add a CostBasis page here with all our efforts later today. So please join Traders Advocacy too. That's important. Well, listen, I do want to get over now to Jason Derbyshire of TradeLog. Again, you can all go back and read the blogs on this. Jason, let me change screens to you now.
Okay, great.
And again, Jason's the business development manager at TradeLog, works with Dave Ike, the president, and they've just done a great job on putting together the software for these deadlines. A lot of people punted on 8949, but TradeLog worked hard on their new release, and it just came out. Jason, if you scroll down to that bottom left of the home page there, people will see how to click on TradeLog accounting software, bottom left there. And this is Jason's screen now. And then they can click here to go over to the TradeLog site. You can hit the click here or the banner.
Yeah, I'll leave it right here for now.
Yeah.
When you click on this, any of the links here, it's actually going to take you straight to our landing page for GreenTrader Tax. And as Bob mentioned, we've been working together with our friends over at GreenTrader Tax for since 2001, and we really have a great relationship together. And especially this year, working together, we've seen the challenges that traders face in tax filing, and we've been committed to a solution to help address these challenges as best as possible. And that solution is in TradeLog.
Jason, let me just jump in on 1 second on you that I forgot to say. It's very important. Back on our blog that you'll read from this morning, a big takeaway is that the 1099s are apples. Trade accounting is oranges. They will not match. The 1099s are prepared for brokers. They leave a lot of stuff out. So when I spoke to these enterprise software makers for the brokers, they admitted that the brokers can't give taxpayers tax information on the securities. They just can't do it. And they admit that the only solution is something like TradeLog. So don't think, oh, I get something from my broker. It's got the tax information I need. It doesn't. I challenge you to come to me and we'll show you it does not. The only really solution that you can use that does the wash sales properly is TradeLog. It does it across all your accounts. It does it with your IRAs. No one broker can report all wash sales. And read the blog. We'll come back to it later. Back to you, Jason.
Yeah, thanks for that, Bob. And on our website here, when you go to our website, of course, we have some information about our partnership with GreenTrader Tax, and we've got a wealth of information under our tax topics as well. And one of the pages I want to point out is listed here under 1099-B reporting problems. And as we've been working with our clients, we've come to really see a good picture of what some brokers are reporting on 1099-Bs and the challenge in trying to report on Form 8949, and we actually address some of the problems with reconciling, what will reconcile and what will never reconcile between the 1099 and 8949. And we've also got a section where we actually address by brokers known challenges that have come up as well as solutions that we have working with our broker partners to help you to be able to report your tax filing properly. And of course, we have other tax topics as well, such as about Form 8949, explaining that and explaining how TradeLog works. Here, if I look on the right side, you'll notice throughout we have our purchase links and our free trial. We do have a 30-day free trial, so we encourage you to go through these links and try out TradeLog and see how it works for you. And then, of course, we have our purchase page, and you can purchase the software at various levels for you. We have different subscription levels. We also have a version for MarktoMarket accounting, which doesn't really affect many of you with 8949, but we have a solution for that. Well, I want to talk a minute about how TradeLog handles Form 8949, why you would need to use that. And once you download and install TradeLog, TradeLog is a software that runs on your PC. The thing that we have to do in TradeLog for accurate reporting is actually retrieve your trade history. Some people think that TradeLog is going to go out and pull in your 1099-B data, but as Bob and Darren have just talked about, that is not going to work if you want accurate tax filing. And so for over 10 years now, what we've found is the only effective way to generate accurate tax reporting is to actually use the trade history that your broker provides, because they can tell us when you bought a trade, when you sold a trade, and the respective amounts. And so that's what we do in TradeLog. I'll open up a sample file here with the TD Ameritrade account, and you'll see here we've actually imported the individual trade history from the brokers. We support over 30 different online brokers. I'll show a little list here in this pop-up box. Most all of your major online brokers we support. We also have the ability to import from an Excel file, from a QFX, which is a Quicken data file. So we can support most every major broker that's out there in importing this trade history. Then once we have your trade history and we have everything matched up, we actually have some great tools that we've put into TradeLog this year to help with the process of generating an accurate Form 8949 and reconciling your trade history to a reasonable degree with your broker 1099-B. I'll show you that under the Reports menu. Under our Gains and Losses and Tax Forms, we have a Reconcile 1099-B report. And in this process, we actually have you enter important data from your 1099-B. For example, gross proceeds. This is a number that you can get from your 1099-B. You enter into TradeLog, and we can actually reconcile the gross proceeds. And in 90% of the cases, gross proceeds are going to reconcile perfectly. Now, there are a few challenges this year because of the way some brokers reported gross proceeds, so you might have to make some adjustments, but that can help us to find that and identify. And this is a way to make sure that the sales reported in TradeLog are matching with the sales your broker reported on the 1099-B, so we know you're not missing anything. A new feature we've added this year for Form 8949 is the ability to enter your reported cost basis for short-term or long-term. Very few people have long-term cost basis that was reported, so most people it's just the short-term. And what this number is this is the total cost basis that your broker reported to the IRS for covered securities. And there's a whole discussion on our website. We have a link here that talks about the difference between a covered and a non-covered security, so you can learn more about that. But most brokers actually provide that number, the reported cost basis, and you can put that into TradeLog. And I'll show you in a minute how we use that to help in your tax filing. And on the right side, we have some check boxes regarding your 1099-B, because each broker's 1099 is a little bit different. And so what we do is have check boxes that allow you to tell TradeLog what your broker is reporting and is not reporting. For example, some brokers, well, with options, no broker has reported options this year, so that's something that might come into play in the future, so we put that in there. Adjusting for option premiums, though, that is something that some brokers are adjusting for any exercised options that you had, some are not. So that can be toggled on and off. Mutual funds, ETFs, ETNs, DRIPs, these are things that can be reported a little bit different by different brokers. And so we have notes that explain when to uncheck that box or when to leave it checked, and that's going, again, to help make sure that TradeLog generates an 8949 that's accurate, and within a reasonable degree we get some reconciliation with your 1099-B. I'm going to go ahead and click the button here to run the 1099 reconciliation report. I've entered my gross sales. You notice here this report, what we are reconciling with is that gross sales number. So I entered in my $45 million number for my 1099-B, and you'll notice here TradeLog is reporting within 1 penny the same number of sales as my broker reported. So that's an excellent sign. That tells us that our trade history and TradeLog is pretty much accurate, and we've got the same amount of sales. Now, again, I mentioned sometimes there's various adjustments, so we adjust for all of that in here to try to reconcile that. And if there is a difference, we give some notes about what to do next. If there is a difference, what you need to be concerned about, how to address it, and that way we can make sure that your reporting is accurate. This isn't a report that you send to the IRS. This is just a report for your benefit so that you can feel comfortable knowing that your gross sales reconcile. But you might ask about cost basis. Well, let's take a look at the Form 8949 now that TradeLog generates. That's been selected here on my report menu, so I'll run that report and explain a little bit about the 8949 that we generate. We create an 8949 that looks just like the IRS form. It's in the same format, so it is accepted by the IRS. There's a Part 1 and a Part 2. Part 1 is for short term. Part 2 is for long term. But within each part, you can have up to 3 different categories. Checkbox A here is for short-term trades where cost basis was reported to the IRS. B would be if the basis was not reported to the IRS, but it was on the 1099-B. And box C would basically be transactions that are not reported on the 1099 at all. So you could have 3 different versions of Part 1 and 3 different versions of Part 2, all with different trades on it. So TradeLog has already classified my trade history based on the information I've told it and based on the IRS rules. We list all the trades. Here you'll notice these are all short-term trades where the cost basis was reported to the IRS. And so we list wash sale adjustments. Those have all been made here in our file. And if I go to the last page in this section, page 20 is the last page, you'll notice at the end of this section, here is where the cost basis comes into play. Remember, I had a number for my 1099-B, which is the total cost basis reported to the IRS. And so TradeLog gives you the option, if you put that number in, what we will do is make an adjustment to reconcile the difference between what TradeLog is reporting for total cost basis and what your broker is reporting. As Darren mentioned, there's the concern that if the IRS proceeds as planned, they're probably going to check this number and they're going to check the 1099-B total, and they want to see that those are matching. And so what we've done then is we've put an adjustment line in TradeLog. The code for this adjustment is a code B on the 8949. That tells the IRS that there is an adjustment to the cost basis that the broker reported. We've adjusted that over to the adjustment column, $15,000. So the net gain and loss is still the same. You're still reporting the same taxable gain or loss. It's just a matter of making sure this column doesn't throw any red flags with the IRS. Very interestingly, if you were to look at the 1099-B for the sample file I have right here, after we make this adjustment, these totals match exactly what the 1099 showed. So what that tells us is that this broker reported wash sales differently than TradeLog did, and that's why we had to shift $15,000 to the adjustment column for wash sales.
Jason, let me stop you for a second on wash sales, okay? Because wash sales are such an important part of everything that's wrong this year. And Darren and Johnny, you're welcome to jump in too. And we'll just take a little break in the presentation, Jason, and get some more interactivity as well. I'm just going to change screens for a second. Stay where you are on your screen, though.
Sure will.
Okay. And I want to take people back to today's blog. This is something that Darren helped me figure out, and we really got to the bottom of it on a call last night. Here's a wash sale situation. If you just read this 2 paragraphs right here, securities brokers report 2011 cost basis on stocks only. That's why Jason, by the way, said they don't report long-term, because if you bought something in 2011, it's not long-term yet. A few brokers like Fidelity happen to report 2010 cost basis, but they're alone. So the problem is, if you're only reporting 2011 cost basis, you're not going to report a wash sale deferral from the year-end 2010. It's just going to be left out of the system. The enterprise software maker's not going to do it. It's not part of the 1099 rule. This is a classic case of the flaw. So when you look at this example, you bought a stock on December 22nd, 2010. So we're looking at this example now for a material loss, and you repurchased that same stock symbol on January 18th, 2011. So it's a wash sale because you bought it back within 30 days. So the IRS says you can't take that loss in 2010. You have to defer it to 2011. And Jason just showed us 15,000 of wash sales that TradeLog said happened for that client in 2011. And TradeLog deferred it, but the broker didn't. Now, some of that may have been connected to wash sales from the prior year, because you can have a string of wash sales throughout the year. Probably not. But in any event, look at this example again. Your broker is not going to report the deferred wash sale cost basis from 2010. They're going to leave it out. So your cost basis is going to be under. And actually, Jason, on your example, it could very well be also this problem. The broker could have understated the cost basis because they didn't pick up the deferred wash sale. Our clients did it properly last year. And that's why TradeLog is so important. You keep your data file and you carry it over from year to year with all these carryover issues. You can't break the chain on that. So this fundamentally right here is an error that so many brokers are going to have. Now, we go on further later on in the blogs that wash sales are always bound to be wrong. First, many brokers, their back office systems are just not good on wash sales. They've never done it before. TradeLog's been working hard on it for a decade, asking us questions at every juncture. Wait till you see this, the other reason. Second, the cost basis transition rules. I just covered that on the wash sale. Third, brokers rushed the 1099s. Before the end of January, they rushed them out because they had to be printed and sent by February 15th. You can't tell year-end wash sales until you cut it off in January. So that's fourth. This is the biggie. Most people don't realize this, that brokers calculate wash sales based on identical positions between two of the exact same symbols. They don't have to do it. They have different rules for 1099s than you, a taxpayer, have for taxes. You have to report based on substantially identical, which includes between stocks and options, but the broker doesn't. And that's why some competing products to TradeLog do it like the broker, because they have enterprise products too, going to a master. I don't want to mention names. So they only do wash sales between stocks, not between options too. So many traders trade stocks and options. So the wash sales are wrong. Now, even if they ever got all that right, which they won't, because you just see they have different rules. But no broker could do, lastly, between all your accounts like TradeLog can. So TradeLog is really the only answer. Wash sales are going to throw so much of this off.
Well, the issue with wash sales, based on what Bob was referring to, it is an issue for the 2011 1099s just because of the fact that the prior wash sales associated with anything in 10 that was coming into 11 is not taken into account. So that is definitely an issue that if you had any positions that had wash sales from the prior year that was brought over, you cannot rely on the 1099. The other issue is if you have multiple accounts, wash sales, the brokers are only calculating wash sales for transactions that took place inside that respective account. So if you have an account at E-Trade or TD Ameritrade, just using those two for an example, and you're trading substantial identical positions in both of those accounts, each of them may or may not calculate wash sales, but unless you actually utilize TradeLog and the feature that's built inside TradeLog to combine all of your activity among all of your brokerage accounts, you won't ever get your wash sale calculations correct. So that's another reason why you want to consider using TradeLog. The other thing is, not only do we need to focus on the fact that the 1099s have some concerns for this year, is unless there's some regulatory changes in the due dates of when the brokers are required to actually issue 1099s in the future, this problem that we're seeing with some wash sale calculations will never go away. And this is what we mean. Bob and I had a good conversation yesterday with someone within the industry. And the brokers, as Bob mentioned, really want to get the 1099s out, and they start that process about mid-January. So your 2012 1099s are going to start being calculated and submitted for printing around January 15th of 2013. Well, as Bob said, you can't calculate all your wash sales until you complete the 30-day period, which includes January 30th of 2013. So what does that mean? Your 1099s that you get will not be correct for calculating wash sales in the future. And the answer that we got from our call yesterday is expect corrected 1099s, because after the January month is closed out, then the brokers can go back and calculate the wash sales, and they're anticipating issuing corrected 1099s. This is just an ongoing problem. So if you're thinking that you can rely on these 1099s, you're mistaken. The only way that you're actually going to be able to prepare a tax return with reasonable information to file your return is to utilize a program like TradeLog, where you can download your data and have it calculate the wash sales for you. You want to add anything to that?
Darren, hey, Darren, I could add something to that. This is Johnny Padgett, and I deal with TradeLog with different types of clients. I've got large and small clients, and I've got a couple of examples here that can give you an idea of the problem that Darren and Bob and Jason are talking about. One of the things in particular, I had a client recently at Fidelity who was a large client, traded a tremendous amount throughout the year, but ends up at the end of the year, the 1099 is actually showing $12 million less than in gross proceeds than what is shown by TradeLog. Now, we've been able to independently verify that the numbers on TradeLog are right. Both the client had good records, and we were able to drill down and figure out that TradeLog, using the actual trade confirmations, is the correct amount. But this is a 1,000-page 1099, and they're $12 million difference caused systematically by some problems in the way that they're calculating that is detailed in what Jason said. If you'll look at his report there on their website where they detailed some of the issues in this particular way that they're doing short sales. That's just one example. And $12 million is a big adjustment that you don't necessarily want on your tax return. Even though we think the numbers are right and talking to the client feels good about the numbers, there's still that $12 million number that is not really what you want to send to the IRS as an adjustment. So hopefully there will be a correction, although we don't know that there will be. A smaller client, a similar situation, a client with less than $50,000 in their account, or lost approximately $50,000 in their account for the year. However, the 1099, this is a Schwab client, is showing that they lost $500,000 based on the gross proceeds and wash sale adjustments as they showed there. We've independently verified that again, that TradeLog is correct. We have a lot of confidence in what TradeLog is doing because of the way they get the actual trade confirmation data, and that's why it's more accurate.
Johnny, let me stop you for a second. I was giving people the impression that brokers are not picking up wash sales that we pick up. Well, in the case of 010, by brokers leaving it out, they made you overstate your taxes and overpay. If they don't do wash sales right at year end, maybe they're making you underpay. But Johnny, aren't there a lot of these brokers that don't seem to be clearing the wash sales? They just keep running a cumulative number and they don't absorb them with later profits? So again,
yeah, on the 1099, you're right, Bob. On the 1099, what the numbers are really misleading and hard to interpret, both I think for the IRS and definitely for the consumer, because what they're showing on the 1099 is the wash sale for that particular transaction, the potential wash sale. They're not flowing that through so that as it's washed out throughout the year, as that is sold and there's more than a 30-day time period goes by, that wash sale would disappear. But they're not taking that out of their numbers in a lot of the cases that we've seen on the 1099. So you end up with this huge number of wash sales. In one case, it showed a wash sale amount. In this particular case I mentioned before in Fidelity of $56 million. Well, he didn't have anywhere close to $56 million worth of wash sales, but throughout the year, the sum total of all his potential wash sales was $56 million.
Yeah, so
it was only $1 million.
Right, so it's more correct to say that the brokers identify original wash sales, but they are not updating the system for wash sale absorption, wash sales that disappear. So that's a meaningless number, and that's
right.
Scary. Most taxpayers are not going to understand that. That's like someone who scores a tax bill just without dynamic scoring. It's even worse. These are just original wash sale conditions. Wash sales are not original wash sale conditions. They are given birth, and you have an opportunity to break the chain so the wash sale goes away because you don't buy it back at year end. If you had a wash sale every day of the year and you just stopped trading on November 15th and you just exited the business, you don't have any wash sales at year end. Those are final losses. But these 1099s might show $1 million wash sale. So this is an example of what's very wrong with the reporting. Back to you, Johnny. You're on a roll.
Well, no, and that's a perfect example, like the other client that I mentioned, the smaller client. They're showing a $500,000 loss on theirs, and a lot of it has to do with the wash sale miscalculations. This lady is just an example of what you said. They actually stopped trading in November and were through trading, so they would have no wash sales. She closed her account, she sold everything, and yet wash sales are shown on the report. So there's just a lot of inherent problems. The TradeLog has done a tremendous job of tackling this issue. It is not an easy issue. The brokers are struggling with it. The brokers are doing the best they can, but there are still a number of issues in these type situations that have yet to be addressed.
Now, Johnny, I know that, to be frank, that you're a little hesitant about everything because you're seeing these huge, wild numbers of difference. And we're trying to identify them as best we can. And this is going to go back to you, Darren. This is why Darren and I, as the managing members of Green NFH, we said after speaking with Johnny, after speaking with Jason over at TradeLog and our other CPAs, we have to put this thing on hold. We can't sign tax returns and file these returns before April 15th with big differences. And these clients are going to be audit-based. The early bird is going to get not the worm, but an audit. And it's going to be very painful, and we don't want our clients to go through that, so we want extensions. So Darren, why don't you talk a little bit about how to use TradeLog to get a handle on your numbers, Jay, but then how we do extensions and what we want to do, and the elections too.
Yeah, we're highly recommending extensions this year just because of the issues that we've been discussing. I really do think if you file your return now, chances are that you're going to get a corrected 1099. We know that some of the brokerage firms that clear through Pinson just issued 1099s last week, and immediately they've been notified that they're going to get corrected 1099s in the near future. So there's no point of trying to rush to get your tax return filed. File the extension. If you go ahead and file your return now and you get a corrected 1099, I can promise you that what the IRS is going to use to match up the information on your tax return is not going to be what the original 1099 was. It's going to be the corrected one. It happened back in 2000, the first part of 2000s, when the qualified dividends came out. Qualified dividends was something new on the 1099s. Everybody started reporting what was on the 1099s on their individual tax returns. Later, the brokers issued corrected 1099s. Everybody said, I'm going to just pass on that. The computer systems started matching what was on the tax returns of the individuals compared to what was on the corrected 1099s, and here came a flood of IRS CP 2000 notices. So if that happened with just that little addition, you can highly expect a large amount of notices coming if you file now. So with that said, file an extension. We always like to be very conservative with our extension because the extension is an extension to actually file your return. It's not an extension to pay the tax liability. If you have a tax liability outstanding, you need to at least pay 90% of that in by April 17th this year. Be conservative with your calculations. If you're a close call from maybe qualifying for trader status, you'll want to discuss that with your CPA. We'll be glad to have a consultation with you in that respect. But if you're not sure whether you're going to qualify for trader status, prepare the extension calculations, maybe without trader status. Be conservative with your calculations for the extension. Pay in the amount. Then when you actually file the tax returns, once we get all these corrected 1099s, which we anticipate to be issued, then you can be, as we say, as aggressive as you can within the law with your actual filing of the return. If you get a refund back, that's great. That's what we anticipate because you were conservative with your extension. But you don't want to be the opposite. You don't want to be very aggressive with your extension and then come to find out that you owe the actual filing of your tax return, because then you'll be subject to penalties and interest from April 17th. So you want to try to avoid that.
And that's great, Darren. And I know we talk about good faith in this blog that we worked on together. People can go back like 3 blogs where we had some resources about the extension. And the other big thing that we focus on for April 15th, this whole mess in the past is really a cleaning mess. TradeLog is right for the most part. You can count on it for your extensions to be filed in good faith so that you're not going to have penalties and pay the 90%. But the rest of this, we're just punting to have more time to clean up last year. Don't take your eye off the ball for this year. Biggest thing that we focus on as a firm on April 15th is the MTM election. Darren, do you want to talk about that, or do you prefer I do?
You can go ahead, Bob. That's fine.
All right. So a lot of what I do every day is I work on these consultations, consulting clients on should you elect MarktoMarket or not. If you missed the due date, maybe set up an entity, do over elections. Darren heads up tax production. Every return in our office, he's looking at, he's reviewing. That's a monster job. It's our core business. I am so lucky that Darren is my partner for that, and he's great at it. I focus more on the consultation, so don't forget this. if you had mark-to-market accounting all along, that was our claim to fame going way back to 1997, you have a loss, it's a business ordinary loss. There's no capital loss limitation. There are no wash sales on your business positions. You're exempt from all that. You don't even need this 8949. And TradeLog has an MTM version. It used to be GTT TradeLog when we helped add that to TradeLog. Now it's called TradeLog MTM. And that gets you out of all this mess. But if you have a capital loss carryover, you have to think twice about electing mark-to-market because you need capital gains to use up your capital loss carryover. So if you have a big Q1 2012 loss, elect mark-to-market to lock it in as an ordinary loss. You can set up a new entity with us, which has a do-over on the election, so you can get back to generating capital gains to use up your capital loss carryover. This session today is not on mark-to-market. Read about it in our guides. Consult with me about it. Jason, I want to go back to you to finish up on some of the issues with the presentation. So I'll change back to you.
Great, sure. So we just talked a lot about some of the challenges that we see with wash sales, and again, TradeLog is going to provide you with an 8949 that has adjusted everything according to publication 550 rules for 8949. And like we said, we're going to do some work to help you try to reconcile. We actually provide a page here. Let me get this on here. Our last page of the 8949 we generate is an instruction sheet. It's not a tax form, but it's for you to use. And we actually show you where the numbers from your 8949 would flow on to the actual Schedule D. And we've even added some information boxes here to help you see how this relates to your 1099-B. In the blue boxes, these are the totals that should add up to be greater than or equal to your gross sales or your gross proceeds. And in these two red boxes, this is what we feel the IRS is going to be looking at to compare what your 1099-B reported for CostBasis and what's on the 8949. So as I showed earlier, we do have the ability to make an adjustment so that this cost basis matches. So for many people, they're able to use TradeLog right now. It matches up really well. They're able to go ahead and file. But just to build on what Bob and Darren were just talking about with extensions, especially if there is a large or material adjustment here and you're not sure why. For example, in this account, I was able to look and see, oh, yep, it was wash sales that were different. But if it's a very large difference, then one of the best recommendations is to consider, as Bob said, filing an extension and waiting to see what comes out as far as amendments, and also talking with your CPA about, what is different and what are my options, just because that'll help reduce any risk of you getting that notice, like Darren said.
Now, Jason, let me just add a comment here. We want people to use TradeLog right now. When we prepare an extension, we need to know what are your trading gains and losses. When you have $50 million going back and forth, that number can be all over the place. We need a number we can count on for the extension. It's most of your return. We fill in the blanks later, but it's a good estimate. So TradeLog is a starting point. So an extension doesn't mean you have a pass not to work on this. You got to work on this part of it now.
That's right. Yeah, and that's a great thing too, as Darren was talking about. You want to make sure you've got a good estimate here, or maybe that was Bob, excuse me. But as far as what is going to be your conservative taxable income or your loss from your trading, and so the great thing with TradeLog is you can go ahead and get that number now. See where you stand, and if you file an extension, you can come back and do the actual final forms later, but at least right now, like Bob said, you're going to have the data, you're going to have an idea of what your taxes should be. It's just a matter now of how you're going to report that.
Now, Jason, let me just jump in again. TradeLog is a starting point, but there's a whole litany of trader tax benefits that GreenTrader Tax is known for. the Schedule C expenses, the entities, the adjusted gross income deductions, what's a future, what's a security. This is a lot of work. TradeLog makes it easy, but it's just a starting point with us. So if you're smart, get our help. And if you want our help for tax preparation where we can add a lot of value, come to us. We are going to file an extension, even if your 8949 looks cleaner here, because we need more time to fill in all the details, and we don't rush returns last minute, and we also think the early bird will get the notices. So we advocate extensions all around, and use us for the tax preparation values we can add. Now, Jason, back to you on showing some of the forms here.
Yeah, and that's a great point too, because you know, and so oftentimes we get people, they buy TradeLog and they say, you know what, this is just too much for me to do, to try to use this software, to try to understand, and that's what we really recommend. GreenTrader Tax here is our partner. You know, for various levels, like Bob said, some people use TradeLog on their own and just provide the reports and let Green do the rest of their accounting. Some of you might say, well, hey, I don't want to mess with it at all. Well, different levels there, and with TradeLog, you know, we do have free support, but our support is limited. We don't provide accounting services, and so when you purchase TradeLog, the support you're going to get is basically how to use the software, making sure functions work. But if you want someone to sit down and try to go through your 1099 and review everything, you know, that's where the guys here at Green are going to be able to do it, and it's well worth it. I often say time is money for me, and so I could spend 8 hours trying to figure my stuff out. Well, that's just 8 hours that I couldn't spend on something else. Well, I can pay Green, and they can actually find me even more savings too.
Well, TradeLog is accounting for a lot of different things that have different tax treatments, and if you check the wrong box, it can really cost you. So that's why it's important to have a CPA firm like GreenTrader Tax, Green NFH, review your TradeLog, because you could be leaving a lot of money on the table. Certain ETF options get 60-40 treatment. We do webinars on all the other weeks about tax treatment. So it's not just a question of hitting the button and having your numbers ready to go. It's what is the tax treatment and how you broke it down. So don't rush this in. Take some more time. Now we are coming up. We have questions to go. Jason, I know you're going to do another presentation next Tuesday in conjunction with GreenTrader Tax, this time through TradeLog, and you're going to show a lot more. So why don't we save it for that? I want to get to some questions that we have from everyone, and also we have some poll questions too. We're going to answer the questions now. Next, actually, let me just quickly do a few poll questions here. So just give me a second here to get this going. So here's the first poll question. Have you read our blogs on the CostBasis? Are you following what we're talking about so far? Try to get your votes in. Get interactive now. We got the polls. We got the questions. A lot of you have been patient. We have a great turnout still on the board here, so we're doing great. Okay, we have 33% voting. Let's try to get 50% voting on all these questions. It's great to get the feedback. This was just a quick question for our own purpose. So I'm sharing the results now, and I see that 46% of you have been following this, but 41% haven't read the blogs yet. I think that if you were interested enough to come to today's webinar, you probably should follow up by reading the blogs. It will explain a lot more to you. So let's go to the next question now. Did you notice differences on your 1099 versus your own trade accounting? So if you've been working on this already, have you noticed the differences? So try to get your votes in here, everybody. 40% voting. We're getting a good turnout here. So yes, you've seen errors, like these wash sales that we're talking about. Yes, you've seen differences, but you think it's apples and oranges differences. Or you just think the broker blew it on the wash sales. But again, you see more and more we're seeing brokers didn't necessarily make errors. They just followed the minimum requirements in the rules, and the rules weren't that well designed. No, you haven't seen any differences. You're not sure. Okay, that's 55% voting. That's great. Let's share the results. 30% see errors. 30% say apples and oranges. 14%. So that's over 50% of you are seeing problems. Only 13% no. 30% not sure. Doesn't that tell you, Darren, that most people have this issue?
Yeah, I'm seeing from this is
Yeah, I'm more concerned about the 36%.
Yeah, go ahead, Darren, and then Johnny. Go ahead.
The 36% is what concerns me, because it sounds like maybe they're not utilizing a software like TradeLog, and they're thinking they can rely on the brokerage released information, and chances are they're probably the ones that that probably should be 66%, because the ones that are not sure probably have errors.
Right, you know, and people, when they tell me in a consultation that they don't use TradeLog, which is understandable, of course, not everyone uses TradeLog, and a lot of traders are so good with IT, they have their own worksheets, but worksheets don't account for wash sales. They just don't account for wash sales, and it's almost impossible to figure it out manually. So, Johnny, did you want to say something?
Well, I was just going to say, I mean, I've been amazed. I'm seeing a staggering percentage of errors and apples and oranges differences and all those kind of things that, I mean, I would say upwards of 80% of the ones I've seen have issues that just weren't there in the prior years that you've got to account for. And TradeLog is the only way to do it that I know of.
And it's so funny, Johnny, because in years past, I almost never hear about a problem. After you work on a file and some are monsters, you figure it out. They reconcile to the proceeds, the old rules, and everybody feels great. But this year we're all just knowing that the storm is coming, and we're battening down the hatches.
Right.
Let's go to the next question here. I did share that one, so we'll go to the next one. What type of errors did you notice on your 1099-Bs? Did you notice the wash sales losses were deferred, not deferred? Excuse me. Wash sales from 010 weren't picked up. 011 wash sales are wrong. Short sales are reported wrong. Johnny, Darren, do you want to jump in about what happened with the short sales? Last year they had the proceeds on the 1099. This year they're not supposed to. Some of them adjusted it to a cost basis wrong. Jason, Darren, Johnny, jump in on that, the short sales. And, of course, open short sales, when they close, it's T plus its settlement date, not trade date. Any of you guys want to elaborate on that?
Well, in the past they were reporting short sales because it was a sale, so that was being reported on the 1099.
Open ones,
And this year they're not required to report that, so and they're not supposed to report it. So yeah, that does make a difference.
You mean the open short sales?
Correct.
Right.
The open shorts, that's right. And the other thing that we've noticed, I just had another example come in my office today, is the brokers are actually flipping it.
Right.
You actually sell something in the past that when you sell it short, that's still your proceeds. But now they're saying when you sell it short, some brokers are reporting that as your cost basis. And then when you buy it back, they're calling that your sales proceeds. So they're actually flipping that. So when you're trying to reconcile that to maybe the gain and loss report within TradeLog, sometimes there's discrepancies just because of that.
Yeah, this last point here about the covered versus non-covered, and Jason showed he has a link on the site going through some of that. And I know some of the brokers are a little off on that. If it's an ETF, it's really covered, but that's really for your RICs, not necessarily your publicly traded partnerships. Darren, did you want to, or Johnny or Jason, did you want to add any discussion about covered versus non-covered?
Jason, one thing I'll know that we've seen is every single broker seems to be a little bit different in what they'll report as covered or non-covered, especially on those ETFs. So it definitely causes some challenges there.
Well, I'm sharing the results of this poll now, and you'll see 24% wash sale losses. They had that problem where they didn't pick it up from 010. That's a big problem. 011, the wash sales are wrong. Like we said, they're not reporting wash sales. They're reporting original wash sale conditions. Very different. Very, very different.
That's a huge point. Yeah, that's just so confusing to people. I know that's going to cause.
I'm going to add that quickly to the blog I wrote today, Johnny, because I think that crystallizes a lot, and I'm glad that you took us through that before. And that's a kind of insight you have doing this day in and day out. A lot of this stuff, I don't really use TradeLog myself every day, all day. I'm not doing the accounting. Darren's heading up the tax production, so I need you guys to feed this information into me. Okay, so interesting results here. A lot of problems. You can see that. We're going a little after the 2 o'clock here because we're going to get to your questions too, but we're not going to go too long otherwise. And let's launch this question. Do you use TradeLog now? Are you using the program now? By the way, we get, in full disclosure, and it says this on our blog, we do get a small commission on selling TradeLog. It's the same price you get other places. We only sell TradeLog. It's not because we get a commission. It's because it's the only solution that our CPAs are comfortable signing a return on, whether we got a commission or not. A lot of people that we send to TradeLog buy it in a way that we don't get a commission. We don't care. All we care about is that you have the right tool, so your tax returns are right, that we can take your information and feel confident about signing those returns as a preparer. You go to your local CPA, you give them the 1099, ask them about trader tax status, ask them about mark-to-market accounting. They're going to send you to us. They don't want the risk. If they're smart, if they care about risk management. So let's see the results here on this poll here. Let's share the news. 19% yes, TradeLog, they have TradeLog, it works great. 19% yes, they have some questions with it. TradeLog has free product support. 16% yes, it shows large differences. That's understandable. You may want to file the extension because we're hoping the IRS will say, give some relief on those differences. And maybe we'll find out more about what your differences are. 21% no, they have another solution. 24%, I just rely on brokerage reporting, but should I? No, you should not rely on the brokerage reporting. The brokerage reporting is for their rules, their apples. You need to report on oranges. Read today's blog. That will convince you 24% that you should not do that. And your other solution probably does not do wash sales between stocks and options, one of the competing programs on the market. Quite frankly, I just don't know if there's another solution that does work properly, because the enterprise solution ones are for the broker. Those are for the apples. They're not for the oranges. And let's see if we had one more question here. All right. I plan to file an extension. Did we convince you? What do you plan to do? This is the last poll question, and then we're going to get to your questions on the board. So get your answers in here. So far, I see a lot of people plan to file an extension. I'm going to open the questions to look at them, and I'll cut and paste some into chat so my panelists can see them too. Only I can see the questions. All right, let's close this one. Last poll question here. Just about done on the voting. Thank you all. All right, we got 45%. Let's share that. 57% are going to, but they're still unclear of their trading gain or loss. So you're going to file an extension, but you're unclear your trading gain or loss. I think the answer is get TradeLog, get the free trial, then get the program. Call TradeLog if you have a question. You can't come to us the last week. We're just going to be too busy with our clients. So you might be able to speak with me in a consultation. Call Mindy in customer support. Don't leave it to the last minute. It's dangerous. That's dangerous. Now, 27% yes, and you're confident with your results. That's great. That's a good percentage. Only 12% don't want an extension, and 4% are ready to file now. That's good. I'm happy with those answers. I think the ones that don't want an extension should read our content. Extensions have always been better, unless you're in a rush for a refund. But, you know, you're going to get a refund. Then you're going to get a corrected 1099. You're going to maybe owe back some of that refund, hopefully not. And if you're rushing for a refund, you might be rushing to spend the money. Where are you going to get the money to pay back the taxes? That's annoying. We're trying to avoid that. Okay, let's finish. The polls are done now. And let's see what the audience is viewing here. Okay, let's hide the poll. And let's go back to your Q&A now. And while we do that, we'll just go back to our home page in your view. So I'll say among my panelists maybe who wants to field a particular question, and I'll just read them. And we have a fair number of questions on the board. Someone said I did a great job on the Tasty Trade radio show this morning. Thank you very much. I didn't realize they had other tax guys, so I logged in 5 minutes early. I heard what the other guy said. I almost disagreed with everything he said, and so I started off my interview maybe a little sour grapes saying that. I'm sorry I did. But, you know, when you hear incorrect information given or the wrong kind of advice, it gets you going as a CPA. John question. Given broker difficulties in issuing accurate 1099s, again, John, they may be doing them accurately according to the IRS rules. That's the revelation we kind of came to this morning, the more we drill down. Yes, they botched some things, but other things, they're doing apples. We want oranges. Back to the question, do you believe there is any likelihood the IRS will allow any type of automatic filing of extensions for traders, or am I being naive? They won't do that, John. There is an automatic extension for all taxpayers. It's automatic. Just make sure that you pay 90%. Otherwise, it's not valid. If you pay less than 90%, there are late filing, late payment penalties, total of 5% per month up to 5 months. You can probably get penalties abated if that happens to you if you acted in good faith. If you just use a 1099 and didn't try to at least use TradeLog, I'm not sure that's good faith. But if you have a really botched 1099, it's hard for the IRS to hit you with penalties, but that's hopeful. Try to do it right and pay 90%. Stanley, I think the administration is trying to eliminate the markets by making it more and more difficult to comply. IRS fines and charges. Yes, Stanley, I think that some of the recent administrations are doing a lot more red tape, but don't forget this cost-basis reporting rules came from 2008. It came from President Bush's administration. The IRS is not that political. Yes, there are certain elements that want to have financial transactions taxes that we're fighting against, that want to raise taxes on investment income, that want to repeal carried interest, but this is not that. This is close the gap. They want taxpayers to stop cheating and to stop making convenient errors rather than purposeful errors. But I think they should maybe just go and treat it like 60-40, like 1256 for traders. Give them 60-40 rates and economic reporting. Make mark-to-market more default. That's a whole other exercise. By the way, Darren, you remember you talked about 2000 when they changed it for qualifying dividends. Look what's going to happen at the end of this year when the Bush tax cuts expire at the end of the year, and they can't decide it until the lame duck session going into Christmas, and the IRS already has to have their tax forms ready for the next year. It's going to be a disaster next year come tax season, I'm predicting now. There's no way they'll decide the Bush tax cuts before the election. Just not going to happen.
No, no one's going to want to do that.
Yeah. Charles, I am a day trader, and I enter and cover all my trades in the same day. A lot of traders do that and do not carry open trades into the new year. You still could have wash sales, by the way. When we populate TradeLog with our trades, should we include December trades in the 011? Well, Jason, why don't you answer that? Our clients that use TradeLog in 010, they have their wash sale numbers correct and rollovers going into the next year. Jason, how do you suggest that someone who's new to TradeLog for 011, do you want them to bring in their 010 trades? I mean, to have the right starting point, or do they just pick up where they left off on their tax returns? Darren and Jason, Johnny, jump in here.
What we do ask when someone uses TradeLog the first time, they do have to enter any positions that carried over from the previous tax year. So, of course, as he said there, if he closes everything out at the end of each day, that wouldn't apply. As far as wash sales, if you disallowed wash sales the previous tax year, then we do ask that you put those into TradeLog if there were wash sales that were attached to trades in January. But if you didn't know that, then you didn't, and you filed your 2010 taxes and you didn't have any disallowed losses that you reported, then you just pretty much have to start at a clean point, unless you wanted to go back and file an amended return for 2010 or the year before. So that just depends really on what you have. If you know what losses were disallowed at the end of the year and you know what it was attached to, then we can help you get that entered into TradeLog.
Good. Bill has a question here. How much leverage do you, that's us, have to get some of this stuff changed on the relief? Bill, GreenTrader Tax probably doesn't have that much leverage. I think more and more we do speak with people in charge, and we are respected on these issues. I think Darren is our leverage guy, because Darren's been involved with the accounting industry groups and involved with the task force, and I think he has spoken with people in Washington, as Mark Feldman, our tax attorney, and I have on other issues too. Darren has spoken with people on CostBasis, on Form 3115s, on the 4797. Feldman and I have on Forex. So I don't know. I don't think the IRS will really change this formally, because if they say to everyone we're not going to match it, then everyone's off to the races again on just, Wild West reporting. Darren, what do you think?
I agree. There is processes in the works behind the scenes in discussion with the IRS. There is a task force with the AICPA, which is the American Institute of Certified Public Accountants, that I've been asked to serve on, that we are working to actually present to the IRS some of the issues that we're seeing within our clients, within what TradeLog is seeing, working directly with the brokers. It's not the broker's fault. We're not blaming the brokers. Brokers are having to deal with what they actually have, and they're trying to work within that means. They realize that there's some inconsistencies, and they want to try to resolve it too. So we're trying to work directly with the brokers. We're not blaming them. We're just asking for some potential relief from the overall matching aspect so that we don't result in a large amount of notices going forward. So in the future, when the brokers are basically, what we want to try to achieve is the brokers have some sort of overall standard that every broker reports this information to the taxpayer and to the IRS, because currently every broker is basically doing it their own way within the procedures that the IRS has given, the regulations, but they're not all the same, and because of that, that's resulting in some of the issues that we now have at hand. So hopefully over time there can be some resolution to this, but the immediate concern is where we are faced right now in discussing what are we going to do about 2011, and how are we going to avoid all of these potential computer-generated notices because of this matching. And as we get more information and we can actually release that, I'm sure that that'll be posted on our website, and we'll do webinars. So all I can say for now is just stay tuned and know that we're trying to work in the best interest of you and all of the taxpayers in general that have brokerage accounts and are facing these issues.
And we're trying to help the brokers too, because they're being swarmed with calls and they don't know what it's all about. They need their first understanding. Some of it's apples and oranges too. And thanks, Darren. And it's great that you have that kind of prominence in the industry. I really appreciate it. So a few more questions here. Someone was asking, well, would Trader Tax Status get you out of that? Not Trader Tax Status, Section 475 gets you out of part of it, but still a broker does not issue you a 1099 based on your elections. They should not. Some of the brokers have. Schwab was giving traders a Form 4797 if they said they have mark-to-market accounting. Some of those traders came to us and we said, you don't qualify. They never elected on time, yet they told Schwab they want a 4797 and they got one. That's wrong. 1099s are prepared for the default investor. Plain vanilla. Everyone one of a kind. One size fits all. That's the apple. Every orange is different. Clementine, orange, grapefruit. You all have different elections. And we have another blog coming out tomorrow on Forex 1099s for forwards that the dealers give. And how, again, they have nothing to do with what your reporting should be. So even if you're a Form 4797 trader, the IRS is still going to get your 1099. They still might want to match it on your return. There won't even be an 8949. The instructions say you're not supposed to include it. And Darren, aren't you concerned that there may be some notices over that too? We've had a couple in the past where they said, where's the proceeds on Schedule D? They didn't understand it was Form 4797.
There are potential for that, but if you actually refer to the 8949 instructions, the Schedule D instructions, it very clearly says in there that if you have elected 475F to use Form 4797 instead of Form 8949. So we put that in our footnotes to the tax return for all of our trader clients so the IRS can refer to that, and that should reduce the amount of notices, if any are potentially generated. We can just refer to our footnotes that were part of the filing.
The reason we don't like notices is that the IRS goes on fishing expeditions. They send a notice. They don't like the answers. They can expand the scope, can turn into an exam, multiple years. They can be extremely disruptive to taxpayers, costly, draining, upsetting. We just don't want notices where we can prevent them. Every day we're getting emails, by the way, with, hey, my broker X did this and it should be this other thing, and what can I do? We're trying to assemble a master list on Elite Trader, and thank you to Elite Trader if you came on the call today, users of Elite. I have a thread there, the master list of differences. TradeLog has a nice FAQ page. We'll probably have something like that on our site. Every day Darren sends me a couple of emails from clients about this. So here's one from Stan. My gross proceeds aren't even close with TradeStation. Execution date, settlement date, issue, I think. How do I notate this mistake? Now, brokerage statements are on settlement date. 1099s are on trade date. Tax returns are on trade date. With that one exception, if it's a year-end short sale, they use settlement date. They wait for the actual settlement. Brokers like to wait to settlement to know what's in the bank. But taxes are on trade date. Jason, did you want to jump in about a TradeStation proceeds issue? Any known issues there?
Well, this is Darren, but I'll comment on that. What you need to do is actually go back to TradeStation. I had a client just yesterday that we were comparing his proceeds to what was in TradeLog, and it was off. And I said, call TradeStation, let them know. As soon as he called them, he said he was told, yes, your account is already on our list to have corrected 1099s sent out. So that is coming. They're already aware of the issue.
Jason, I was going to say that's what we've seen too. We have seen some TradeStation where things just didn't jive at all. They just match up right. And I've had a couple of clients who said the same thing that Darren said. They've contacted them in TradeStation, said they would be issuing an amended 1099.
Well, it sounds like this first batch was a disaster, and they're all going to do corrections, but when are people going to get these corrections? At the end of March? I mean, Darren, tell people why you just don't like to be barraged last minute, because it's a danger zone. before April 15th?
It's everyone gets in a rush. Everyone gets in a panic as you get closer to a deadline, and it's better to file the extension, and it gives us more opportunity to actually review everything to make sure we're being complete and asking the questions that we need to ask as far as doing the preparation. And when you just have so many clients that you're trying to prepare extensions for, and when you've got so many unresolved issues, the extension just makes that much more sense. That gives us an additional 6 months. Hopefully the 1099s will be starting to come out. We're more relaxed, you're more relaxed, nobody's up against a deadline trying to get things done. I mean, as far as when do we expect the 1099s, the corrected ones, to come out, the answer that I was told from TradeStation is they have no time frame in mind at this time. What does that mean? That means you need to go on extension because it's probably going to be midsummer before you're even going to see anything.
Wow. All right, another question here from Bob. I'm a day trader. Do I have to worry about wash sales? Yes, Bob. If you lose money every day of the year and go into January trading the same 3 symbols, a lot of day traders focus on just a few symbols, a few stocks. You might have a huge wash sale going into the next year. So yes, if you don't break the chain, if you keep getting back into the same symbols 30 days before or after, which obviously you do as a day trader, you have that issue to be concerned about. Bill, which is the most important blog to read? Always the last. The last one is always the latest breakthrough. And that's what it's really been with this CostBasis. We've been digging, and breaking through. So read the one today and work your way back. They are edited by Molly, my editor, so they should be pretty readable. And they should be in Forbes too. Jerry, if TradeLog deals with the wash sales correctly, do we need a corrected 1099 from the broker? Well, Jerry, TradeLog is going to give you the right number on the tax return. We're confident of that. Although with all this craziness, if we can file extensions, we're even more confident because we just let more of the dust settle. But the corrected 1099 may be about narrowing that difference gap on the 8949. So why file with a big difference that might get you audited or a notice when you could wait for the corrected one so that the IRS matches better and you don't get a notice? What's the rush to get a notice? I've been practicing for 30 years, I'm sorry to say. I'm not actually old, guys. Darren's much younger. But I never understood why people wanted to rush their returns in for April 15th. To me, it was like getting tomorrow's racing form and then filing. You could see who the winner was before you filed, so you could win. It just makes no sense to rush it. My philosophy has always been be conservative with the cash, let the IRS hold some of your money, but be aggressive with your filings within the law. The IRS holds some of your money so you don't get 1% in the bank or maybe some of your trading capital, but you do great with the results. They feel better about you. When you rush for a refund, sometimes they think something's up. Okay, I don't want to get too long with my answers. Sorry for that, guys. Ben, some people talked about TradeStation again. If you close out all your positions on 12/31, this is from Ben, can you eliminate your wash sale problem? Yes. If you don't get back into any of those same symbols until February 1st, there's no wash sale. You'll see a huge wash sale on the 1099 because they don't know what you did in January. They don't even care. They only care about the initial wash sale condition. Paul, are you saying that all brokers are likely to issue corrected 1099-Bs? No, we're not saying all. I have a feeling many of them will, probably most. What do you think, Darren?
Yeah, it's not going to be all. We're still in talks with the ones that are potentially going to issue. it may be on a per broker case-by-case basis, but just an overall across-the-board blanket, I doubt that's going to happen.
Right. I bet you all brokers will issue some of their clients corrected 1099s. Now, this is not a problem for futures. The futures 1099 for Section 1256 contracts is generally correct. It's economic reporting. We're talking about the securities. Next question, Ziyang. If Fidelity gave wrong wash sale data in 1099, it's not necessarily wrong. It's the original wash sale condition. They may say, hey, don't blame us. We followed the rule. The rule was wrong. And they sent this to the IRS. Is it a problem for your tax return? This is what we're trying to educate the IRS about with our blogs. We're trying to say, give us some relief, but if you don't, understand the problem here so you don't go off on a fishing expedition for errors that are not errors. These are design flaws. That's one of the purposes of our blogs. Next one, Stanley. Since Options Express is owned by Schwab, and I can't find OXBX on any list to e-submit data to the broker, do you know if Schwab will make it available? That's a question for Jason. And I'm not sure exactly of the question, so maybe we should skip it unless you know what he meant, Jason.
Yeah, now as far as what was the data that he wanted to submit?
Options Express.
Okay, because we do have Options Express support for TradeLog, so that we do have full support for that and our supported brokers. It is separate from Charles Schwab because they are still operating two separate platforms even though they're owned by the same company. But we do support importing from Options Express and from Schwab.
Good. And again, Stan, yes, with Section 475, you'll be exempt from wash sales this year. So if you elect 475 by April 15th of this year, it starts on 1/1/012, plus any wash sales that you have from the end of 011. That's part of your Section 481A adjustment, ordinary loss on January 1st. With a mark-to-market accounting election for 2012, you convert your 011 wash sales into ordinary losses on day one. Read Green's 2012 Trader Tax Guide, just came out less than a month ago. It's got all the latest strategies. That's a must read. And then have a consultation with me about the election. We can help you with your extension. We can glance at TradeLog, and we can make the right decision about the election and talk about entities too. That's a money call. That's where the money is. I'm available to you before April 15th on that. Because of Darren, I can focus on those consultations, and Darren is in charge of all those tax returns. I feel bad for you, Darren. It's a huge undertaking this year with this mess. But if there's anyone who can do it, it's you. Go ahead, Johnny.
That's a good point on the 481 adjustments and just in general the mark-to-market adjustments that are made at the end of the year. The TradeLog does a good job of that, and of course you can use TradeLog for that, and of course I can help you if you're just getting started with that or whatever. So mark-to-market definitely is something you still can use TradeLog for, and it's helpful.
Great, thanks, Johnny. And I have another question here. Some people wanted more demonstrations. Come next Tuesday, 1 o'clock, same day, same time, but this time it's going to be hosted in the TradeLog room, and we will be panelists, just like Jason was a panelist on our call today, on our webinar. Anurag. Hi, Jason. My 1099B from Interactive Brokers is showing 3 ETFs that I traded, KOL, XLU, PIN, as uncovered. The problem is TradeLog shows them as covered and puts them in Part 1. I've been trying to work with TradeLog support. That maybe get back to Jason on. It might be too detailed for today. I see the question goes on.
Yeah,
what I know just a second is that you can turn it on in a blanket way, ETFs or not, and then you can also back out or back in exact symbols, right, Jason?
That's correct, yeah. So if you've submitted a request to our support department, they should be following up with you on an answer to that to be able to help resolve that problem.
But what's key is that you have the global capability to turn on ETFs for covered, and then you have the capability to back out the publicly traded partnership ones.
Exactly, that's right.
So you have the capability to get to the right result. That's what's key. And listen, TradeLog was great. They worked with Deborah King, who's not on the call, and Johnny Padgett. Deborah uses TradeLog a lot. She's one of our top CPAs. I saw emails going back every day, and Deborah was saying, well, can you do this, can you do that? I couldn't believe TradeLog worked 24/7 to get this right and to make sure our CPAs were happy with it. And it wasn't easy. And no other solution out there I saw made it on time like this. So I applaud TradeLog working hard on it, and Deborah King and Johnny and Darren for helping. Paul, let's see, next question here. Hold on. CE. How much does TradeLog cost? That's on the TradeLog site. Go to our website. If you buy it through us, we get that small commission. We appreciate it, but get it any way you like. You'll see the costs. They range depending on what you need. When this is not a sales webinar today, this is an informational webinar, but those costs are right on the site. But we do want you to get the program. I am currently using TradeLog, and the gross sales reconciliation report shows a difference of $3,700. Is that close enough? That's not bad. I mean, compared to some of these $1 million numbers that we've seen, but it's maybe big enough to look at what it is. You want to still try to figure out what it is. Rob, wouldn't it be better to paper file?
Wait.
Go ahead, Johnny.
I was going to say, in the past, we would always get it, basically to the penny until this year. So even a $3,700 in prior years would have indicated there's an issue you need to resolve. It may or may not indicate that this year. So that's what I'm saying. It's a little bit more difficult you need to understand what the issue is because it could be an error that you just haven't resolved yet.
And it may not be a $3,700 error. It could be a $100,000 error and a $103,700 error. Once you see an error, you got to investigate. That's good accountant training, right?
Right. And like I say, in the past, when we didn't have these issues with the 1099s, you would get it, and we would get it completely down to the penny. And now it's just we have these other issues that we know are unresolved, but you still wouldn't just ignore things. You do want to try to figure it out.
Jason, this next one's for you from Larry. TradeLog does record, in quotation marks, mean the number of brokerage accounts you have or the number of transactions?
The number
of records.
The records. That is based on your combined total for, so you can have multiple brokers. If you have, for example, TradeLog 600 version, then that's going to allow you to have a total of 600 records in a data file. So you do have to think about, again, we have to combine all of those for final reporting. So that is going to be the combined total number of trade records. But there is no limitation on the number of brokers you can have. So especially if you buy like TradeLog Unlimited, you can have however many brokerage accounts you want as well, and no limit on the number of trades.
I like it when clients can tell me the records because it helps me with round-trip trade numbers for trader tax status analysis. That's something we may work on with you guys down the road, Jason, more building into it. Brian, we'll finish up a few more questions and then we'll wrap up. I really appreciate my panelists staying late. I know they're extremely busy. Darren, I don't know if you have more meetings right now, and if you have to jump or something, let me know. I am having, from Brian, I'll just do a few more questions. I'm having an imbalance between TradeLog and my 1099. Again, expected, apples and oranges. It seemed to be caused by Forex transactions, which are not on the 1099. Now, normally, Jason, we tell people they're not really using TradeLog for Forex. I know you do support a few brokers on Forex. You don't get a 1099 for Forex unless you're trading with a Forex dealer like Citi, FX Pro, and you're trading their hybrid rolling spot. Jason, any pointers about the Forex?
Yeah, with Forex, it is very, very difficult. We only support a few brokers with Forex trades because they do have to report it in a way that we can track. And TradeLog is able to keep track of that, but like Bob just said, it's reported differently for your taxes. So we're able to generate a gain and loss report, though, specifically for those currency type transactions.
Was one of those interactive brokers?
Is one that we have the best support for anything with foreign currencies or for Forex.
You do that with IB, right?
Correct.
Now, Darren, are you still there? Because, you know IB tried to make a splash this year by saying, hey, we're going all the way on tax reporting. We're giving you an 8949. You can count on us, because in years past, we had a lot of trouble with their 1099 reporting. And when they got into all these different platforms, stocks, futures, options, Forex, it got even really confused with some clients. So in this year's Barron's Electronic Investor online survey, Teresa Carey rated IB #1, and she told us, hey, I thought that was great that they went the extra mile on the tax reporting. Guess what? They got it wrong. They got it wrong. Darren, tell us what happened with the 8949 and IB.
Well, IB is attempting to issue 8949s for their clients, but IB does a real good job on their actual 1099s, breaking it out between covered, uncovered shorts. I'll give them an A+ for that. But what we found in this one client's example is the 8949 that actually came from IB for the covered and uncovered transactions, didn't actually agree to the 1099B that they issued. So there's some discrepancies there. And I just, IB still, when it comes to reporting the wash sales, if you had any deferred wash sales from the previous year, they're not technically required to provide that within their overall cost basis. So you have to be cautious with that. And again, just another reason why you want to consider using TradeLog, so it'll incorporate all of that into the program.
So this was an apples and orange where the apple maker said, I want to be an orange. I want to give them what they need, figuring to give them a marketing edge, do better in the survey. But it's not that easy to do, as we're seeing. So I applaud the effort, and so did Barron's, but if the end result is a botched 8949, that didn't do anyone any favors.
No.
Normally, we never mention brokers by name. We don't mention companies by name because we just like to keep it even, Steven. But on this, we have to, because people have issues with various brokers, and they need answers for how to fix those problems. So we kind of have to mention the names. But like Darren said, we're not blaming the brokers for making good apples, but we need oranges. Okay, Thomas, how can we trade one stock multiple times during the day and create wash sales? Well, Thomas, if you buy and sell it every day in December, and then every day in January, and you lost money the last week of December, all those losses are probably going to be deferred to January. That's what the wash sale rules are. Tom, brokerage doesn't have 1099 ready yet. Yeah, some of them don't. We heard some aren't even issuing them until 4/15. It doesn't make any sense. The 1099Bs are being rushed out too soon, which is already too late for tax deadlines, so something has to give. That's in my blog today. Some of you asked multiple questions, so we're going to skip to some. Others have asked some questions and left. We'll probably wrap up soon because we went late here. So please bring your questions to us. Send us emails. Get on consultations. We have a message board. Ask the questions on Elite where I have that master list. But come to next week's call. We're going to field more questions again. Right, Jason, next week?
So that'll be next Tuesday at 1 o'clock.
Yes, and we'll have a Q&A session then as well. So I want to thank everyone, my panelists, my partner, Darren Neuschwander from Green NFH and GreenTrader Tax, head of tax production. Jason Derbyshire of TradeLog, who's done a great job at TradeLog, very impressive, helping them grow a lot with his expertise in development. I know he's been a great resource for Dave Ike, my friend and CEO of Orman Computing, TradeLog. So thanks, everybody. Thanks you all for coming. This recording will be up on our site. Please spread the word with people you know. Send the link around. And if you want our help, just come over to the website. I'll quickly show you here. Once you get on the site, read the blog. That's over here on the right side. Look at some of the webinar recordings. But get the products. Get the guides. Get TradeLog. Get our examples guides. Do as much as you can, but then come to us for the rest of the help. So just again here on Green NFH, here's a photo of Bob Green and Darren Neuschwander at the Traders Expo last year. This is our new firm. There's no one better in the business than Darren. I am so lucky to have him as my partner. It's one of the best business decisions I've ever made in my life. And so back on the home page, get those guides again. And then remember, when you have questions, you're going to want help for tax prep. But Darren runs a tight ship. So you got to get in early. Don't leave it to the last minute, because then you're going to have to, do the best you can with your extension and then come to us afterwards. That's fine too. But if you want us to be responsible for the extension with you, you got to give us time to do the job right. So thank you all very much. By the way, customer support at our firm, just like TradeLog, is great. Mindy, she's the one who you're going to talk to. You're going to talk to Mindy Bartholomew. Not anyone else. It's not going to be a sales call. Mindy doesn't sell anything. Here's Mindy sitting with me at the expo this year. Mindy's job is to give you answers, information, and to help you. And she knows our company, Darren really well, me really well. That's the kind of person you want to speak to. You don't want to speak to a salesperson. We don't sell stuff. We provide solutions, and we want to keep you getting benefits and out of trouble. So thank you all very much. What I'm going to do now is close the recording.